Hi, what I would talk about now is how we'd account for a foreign currency transaction involving a monetary item, and in this case it's an import transaction and it's being dealt with in accordance with IAS 21 AASB 121. The situation we're dealing with here is that an entity, Poor Trading, it enters into an agreement with a US company to provide $100,000 worth of air conditioning units. The order is placed on the 1st of March and the air conditioners are shipped and title passes on the 31st of March. The critical thing there is that the inventory will be recognised when the title passes, so the transaction will be recorded on the 31st of March. The exchange rates are as follows. On the 1st of March the exchange rate is 75 cents and on the 31st of March it's 72 cents. So our attention initially focuses on recording the initial transaction, and the initial transaction has to be recorded at the exchange rate applying on the date of the transaction. So that's going to be the 31st of March when the inventory is shipped and title passes, and the entity would recognise inventory $138,889 and it would recognise a foreign currency payable $138,889. So that's simply been $100,000 converted at the 72 cents. In terms of settling the transaction, what we need to understand is that the financial year end for Poor Trading is the 30th of June. The transaction is settled on the 31st of July, and the exchange rates on these dates are 70 cents and 67 cents respectively. At year end we'd have to do an adjustment of the foreign currency payable to the closing rate, and so what we do is on the 30th of June we calculate the value of the foreign currency payable. It's now $142,000, so it's gone up by $3,968, so we credit the $3,968 and would recognise a foreign currency loss in the statement of profit or loss. On the 31st of July we'd settle the transaction, so we'd pay it, and at this point in time we'd recognise the transaction on the 31st of July. We'd end up paying $149,254, which is $100,000 at the 67 cents exchange rate. So we'd recognise the payment, $149,000, would debit the foreign currency payable, and we can see that there's a difference between the payment of $149,000 and the existing balance of $142,000 for the foreign currency payable, and we'd recognise that as a loss in the statement of profit or loss. Please note that if there hadn't been an intervening financial year end, then all of that loss would have been recognised on settlement. So all that's happened is that we've allocated the loss between before year end and after year end component.